Hello everyone. After another full week of market action, let's revisit the stock ideas we highlighted last week, review how they played out, and update the setups for the week ahead. 1. The market hasn't reversed. It has simply switched engines. Over the past month, the US stock market has undergone a significant internal shift. The technology sector ETF has fallen by approximately 8.6% as capital has continued to move out of semiconductor stocks and highly valued AI names. According to Goldman Sachs data, hedge funds were net sellers of technology stocks in 6 of the past 8 weeks, reducing the market value of their technology holdings by approximately 10%. At the same time, however, the energy sector ETF has gained approximately 7.2%, while healthcare, financials, and communication services have also moved higher. Over the same period, the S&P 500 has remained roughly flat. This is not a market breaking down. It is a market rotating beneath the surface. The sectors doing the most to offset the decline in technology are financials, healthcare, and communication services. Together, these 3 sectors account for more than 31% of the index. Last week, we used this framework to identify several stocks worth watching. 1 week later, 3 of those calls have played out. 2. Exxon Mobil. The target range has been reached. On July 18th, we said that if Exxon Mobil, or XOM, broke through the 150.50 to 152 range, the stock could advance toward 155 to 160. By the close on July 24th, XOM had reached 156.94 after trading as high as 158.71 during the session. The stock moved squarely into our target range. XOM rose from $148.36 to $156.94 during the week, offering a potential gain of as much as approximately 6.31% based on its intraday high. The move was driven by the same factors we highlighted last week. Oil prices moved higher amid rising geopolitical tensions. Exxon had also previously filed an 8K with the SEC, indicating that second quarter earnings could improve by approximately $5 billion compared with the first quarter. The company's July 31st earnings report is now the next major catalyst. Among the analysts covering SOM, the consensus rating is buy with an average price target of $166.73. 3. Bank of America, the $60 support held. Now watch the breakout zone. On July 18th, we said that Bank of America, or BAC, was searching for support around $60. We also said that a confirmed daily close above the 62.10 to 62.30 range would signal the beginning of a new upward trend. The support level has now held, and the stock is approaching the breakout zone. Among the 24 Wall Street analysts covering BAC, the average price target is $68.11. RBC Capital raised its target to $65. Keefe, Bruyette, and Woods raised its target to $70, and Jefferies raised its target to $75. The consensus rating remains buy. Of the 3 stocks discussed in this review, BAC currently offers the clearest near-term upside setup. The stock has moved from searching for support around $60 to testing breakout confirmation near $62. 4. Chubb. Earnings quality held up as sentiment improved. On July 18th, we described Chubb, or CB, as a long-term cash flow compounding asset. The key indicators we identified were its combined ratio and investment income. Chubb's second quarter results comprehensively exceeded expectations. Core operating earnings per share reached $7.26, up 18% year over year. The property and casualty combined ratio improved by 1.8 percentage points to 83.8%. Adjusted net investment income reached a record $1.88 billion. Following the earnings release, CB initially sold off and then staged a steady rebound. The stock traded as low as $338 during the July 22nd session, before recovering over the following sessions and closing at $359.75 on July 24th. CB rose from $352.53 to $359.75 during the week, representing a cumulative gain of approximately 2.05%. The Chubb thesis has also held up. Its earnings quality remains a key strength, and the dual-engine model of underwriting profit and investment income remains firmly intact. The market is gradually absorbing concerns about slower premium growth. 5. Trading setups for next week. Exxon Mobil, stay on the sidelines ahead of earnings. The July 31st earnings report is the next major inflection point. At $156.94, XOM is already trading near the upper end of our target range. Its relative strength index is around 72, placing the stock in overbought territory. If XOM pulls back to between $152 and $155 after earnings, while the geopolitical thesis remains intact, the stock may offer another entry opportunity. If earnings exceed expectations, XOM could advance toward the $161 to $165 range. If results merely meet expectations, however, the current share price may already reflect much of the positive outlook, creating the possibility of a classic sell the news pullback. Bank of America. Watch for a confirmed daily close above $62.10 to $62.30. BAC closed at $62.05 on July 24th. That is very close to the confirmation zone, but the stock has not yet established a clear close above it. If BAC confirms the breakout, the 64 to 65.50 range would be a reasonable next target. The dividend increase and the $40 billion share repurchase authorization provide additional medium-term support. If the stock fails to break through, it may pull back toward the 60 to 60.50 support zone. Chubb. Watch for a decisive break above $360 to $361. CB reached an intraday high of $360.24 on July 24th before closing at $359.75. The stock is now testing an important resistance area. A confirmed break above $360 to $361 could open the way for a move toward the previous high around $365. If the stock pulls back to between $353 and $355 while the combined ratio remains strong, that area could provide a secondary entry opportunity. Citizens JMP's $400 price target offers an additional longer-term upside reference. 6. Summary. The broader framework we laid out last week has held up well. XOM reached this target range. BAC confirmed support around $60. Chubb's earnings supported the thesis that its underwriting quality and investment income engine remains strong. The three stocks have now entered three different price phases. XOM is trading near the upper end of its target range and is waiting for earnings. BAC is approaching a breakout and currently offers the strongest risk-reward setup of the three. Chubb is being repriced after earnings, and the next question is whether the rebound can attract sustained follow-through. The market has shifted from a single-engine structure dominated by technology to a multi-engine structure supported by energy, financials, and insurance. Three developments will determine the next phase for these stocks: Exxon Mobil's earnings report, Bank of America's breakout confirmation, and Chubb's test of its previous high. Subscribe for our weekly stock watch list. Every week we select 3 stocks to watch. We then track the news flow and price action throughout the week and adjust the portfolio as conditions change. Follow along as these setups play out in real time.